Right now, the live stock price for Nokia's US-listed shares is $7.48, and it's currently down about 29 cents, or just under 3.8% on the day. Now, if you're just looking at that intraday chart, you see a sea of red. And this is exactly where the expectation versus reality gap traps so many people. The expectation, looking at today's drop, is that the party is over. You're seeing investors who perhaps jumped in yesterday on that massive 23% surge, taking their profits and running for the exits. You're seeing the algorithms that chase momentum flip from buy to sell. The common belief is that yesterday's spike was the event and today is the inevitable hangover. But the reality? Today's price action is nothing more than noise. It's the market's digestion of what may be the single most important announcement for this company in a decade. The real story isn't today's 3.8% dip. It's the $1 billion investment and strategic partnership announced yesterday by, of all companies, Nvidia. Yes, that Nvidia, the king of artificial intelligence, the driver of the entire market, the company that has outperformed even giants like Apple stock and Tesla stock, has turned its eye to Nokia. This isn't just a vote of confidence, it's a strategic alignment. Nvidia isn't just buying shares, it's partnering to build the future of AI-driven radio access networks, or AI RAN. This fundamentally reframes the entire bull case for Nokia, moving it from a legacy telecom hardware provider into a critical player in the AI infrastructure build-out. So let's be very clear. The market consensus, the one that has kept this stock in a tight, frustrating range for years, is that Nokia is a show-me story. It's the old phone maker that successfully pivoted to 5G network gear, but is now in a brutal low-margin fight with Ericsson and Samsung. The expectation is that its growth is capped by the capital expenditure budgets of massive, slow-moving telecom giants. People see it as a value play, maybe a dividend stock, but never a growth vehicle. They see it as a name you might find in broad Fidelity ETFs or old Fidelity mutual funds, but not something you actively trade with excitement. But the reality, underscored by Nvidia's billion-dollar bet, is that this is no longer the case. The partnership aims to integrate Nvidia's advanced AI technology directly into Nokia's 5G advanced and 6G network solutions. This isn't about selling more 5G antennas, it's about creating intelligent, autonomous networks that can manage themselves, optimize performance in real time, and enable a new class of applications that aren't even possible yet. This move leapfrogs the simple who has a better 5G box argument and puts Nokia at the center of the AI-native network conversation. The stock's violent reaction yesterday and its mild consolidation today is the market trying to reprice a company that just had its entire long-term trajectory altered. The volume we're seeing today is still immense, far above its daily average. This isn't just retail investors on the Robinhood app or SoFi platform cashing out. This is institutional money changing hands. This is Fidelity Investments and other large managers reevaluating their positions. This is the kind of complex development that automated platforms like Schwab Intelligent Portfolios might struggle to interpret, as it's a qualitative shift, not just a quantitative one. Analysts on the Fidelity trading platform and Interactive Brokers platform are scrambling to update their models. What does an AI RAN partnership with Nvidia add to the bottom line? It's not a simple calculation. This is where true online investment analysis comes in. It's not just about looking at a chart on SoFi Invest, it's about understanding that the very DNA of the company's growth story has been rewritten. While some are busy with Robinhood stock trading trying to scalp a few cents, the real investment is in understanding what this means for 2027 and beyond. The SoFi investing platform might show a red arrow, but the smart money is reading the press releases. Let's look at the recent fundamentals, because this Nvidia news didn't happen in a vacuum. Nokia's third-quarter earnings, which came out just last week, were solid. They showed 9% comparable net sales growth and confirmed they're on track to meet their full-year outlook. This isn't a company that was failing, it was a company that was executing, just in a very tough market. Its network infrastructure division has been a quiet star, and its cloud and network services division is growing. And then there's the other crown jewel, the one many investors completely forget, Nokia Technologies. This is the patent licensing arm, a high-margin business that generates roughly 1.4 billion euros in annual run-rate sales. This is a massive, consistent stream of cash. Now, there's a fascinating new report that Nokia is actually stopping its patent licensing to streaming companies. The expectation is, oh no, they're giving up revenue. But the reality could be far more bullish. It suggests a move towards stricter enforcement and protecting its own internal innovation for this new AI-driven era. They may be signaling that their patents are too valuable to simply license out cheaply and are core to their future proprietary tech. This is a story of colliding worlds. You have the hardware world of 5G, the high-margin patent world, and now the explosive growth world of AI infrastructure thanks to Nvidia stock. This makes valuing Nokia incredibly difficult, which is why we're seeing this volatility. For years, the only real growth story was its private 5G enterprise business, and that's a great business. They have over 850 enterprise customers, building private networks for ports, factories, and mines. It's a key growth driver and a clear leader over its rivals. But the Nokia partnership supersedes that. It takes that enterprise-level expertise and suggests it can be applied at a global, carrier-grade scale. This is the kind of catalyst that investment help and self-investing communities dream of, but it requires patience. It's not a get-rich-quick trade, it's a fundamental thesis shift. If you're using an individual brokerage account, whether it's with Fidelity or Interactive Brokers stock trading, this is a name that demands a deeper look, far beyond the surface-level data. So, what happens from here? The future outlook has been completely reset. The risk, of course, is execution. This is a complex partnership. The telecom industry is notoriously slow to adopt new tech. But the catalyst is that AI is not slow. The demand for AI processing is insatiable, and it's becoming clear that the network is the bottleneck. You can't have a world of Tesla stock autonomous cars and Apple stock augmented reality glasses without a network that is intelligent enough to handle them. Nvidia knows this, and it chose Nokia as its partner to solve it. The upside scenario is that Nokia establishes itself as the default premium provider for AI-native networks, opening up an entirely new, high-margin software and services business. The downside is that it's a slow burn, and competitors like Ericsson scramble to create their own alliances. But Nokia has the first-mover advantage with the undisputed market leader. This is the kind of narrative shift that active investors using SoFi active investing tools or the Fidelity mobile app live for. It's about connecting the dots before the rest of the market. Comment below with your thoughts on this. Do you believe this Nvidia partnership is the real deal, or is it just a lot of hype that will fade? I'm genuinely curious to see what the sentiment is after such a wild two-day swing. In the end, we're left with a stark contrast. The expectation, driven by today's red candle, is that Nokia is the same old boring stock and yesterday's pop was a fluke. This is what many using Robinhood fractional shares to trade the news might believe. But the reality, for those doing serious online investing and using platforms from Fidelity Brokerage to Interactive Brokers stock trading, is that the company is fundamentally different than it was 48 hours ago. It has been validated and funded by the most important technology company in the world. The expectation is that you're looking at a telecom equipment supplier. The reality is you might be looking at a core component of the future AI infrastructure. The volatility you're seeing is simply the price trying to catch up to that new, much larger reality.